Thanks, everyone. Good morning. Thanks for coming along. Well done, Kerry, on organising the conference. I think you've heard in the conference over the last 24 hours, you're going to hear in the next 24 hours, lots of reasons to be bullish gold. I hope all the speakers who are promoting that thesis are right. But let me just remind you that $2,200 an ounce in Australian dollars an ounce is an unbelievably good gold price. And we should, as a sector, be making lots of money in that space, at that price. And so I want to give you a sort of a context as to the way we think about the industry at Evolution, some of the lessons we've learned. I've been in the sector long enough to remember when the gold price was 400 Australian dollars an ounce. And you know what? Gold miners made money at those prices. So we really need to reflect on the fact that $2,200 an ounce is an incredible price. And if you're a shareholder of a company that isn't rewarding you at that price today, you need to be concerned. And that's my concern, that we're at kind of record gold prices today. And yet, you know, if you go back to the 2011, 2012 value destruction in the gold sector, when the gold price was $1,900 an ounce and fell, we need to be cautious that we're not on that same path and seeing that same movie again. The gold price goes up and costs go up, and investors are asked to wait until the gold price goes higher because we've got all these bullish sentiments and gold's going to go higher. To wait for your reward. So at Evolution, you're going to hear a lot about, and this talk, you're going to hear a lot about margins and money. Margins and money today, not tomorrow. Because I think that is where you have to be. So just a quick snapshot. We started in 2010, 2011. Evolution was formed. It's now a $7 billion company. Size doesn't really matter. I think what matters is quality. And on the right-hand side of that chart, you see the dividend growth. Last year, it was 9.5 cents per share. And you can see, low-cost production. We're going to produce about 725 to 775,000 ounces of low-cost production, always valuing our reserves at a conservative gold price. Well, we currently do it at 1,350 Australian dollars an ounce, and have an average mine life of about 10 years on a reserve basis. It's not only what you do, it's also how you do it. We've put out sustainability principles, and the three key focuses for us, for our employees, is making sure that their time at Evolution, hopefully a long time, is a highlight of their career. We want to improve our energy efficiency, and we want to improve our water utilization and efficiency. Those are the key drivers on the sustainability piece for us. September's quarterlies have come and mostly gone. You can see what I'm talking about over there. You know, we produced 192,000 ounces, $278 million of operating cash flow, and free cash flow. That's after all capital, after everything has been spent, close to $160 million an ounce. It's interesting that our peers, and we've taken 5 of our peers who have reported to date, have reported all-in costs. Our all-in costs are just over 1,300 Australian dollars an ounce. Their all-in costs range from somewhere between 1,700 Australian dollars an ounce to just under 2,500 Australian dollars an ounce. Yeah, they're investing in the future and they're investing in growth, but if your margins are compressing, or your free cash, not margins, your free cash is being spent today, you really are asking investors to wait until tomorrow for their return. And there is no certainty, whilst I'm absolutely hopeful that the gold price is going higher, there is no certainty that it is. And the key for us in a very cyclical sector is ensuring that we build a gold company that prospers through the cycle. The other important way you can create value in a gold company is obviously exploration. And that's been a sleeping part, or a quiet part of Evolution, but I think it's going to start to get a lot noisier. You're seeing the great exploration success we're having at Cow. We're having some success at Mungari. and we're building a very high-quality portfolio of earlier stage projects. I'm going to try and see if this goes forward, but it's not. Can you move the slide just one forward? Anyway, the next slide deals with return on assets and return on capital. And if we're spending your money, what's a reasonable return to be making for a dollar invested in a gold asset? You're dependent on the gold price. You're dependent on a lot of things. I think investors need to start thinking about geopolitical risk, where the investment is. There's no doubt Australia is an incredibly good destination to be a miner. Low sovereign risk, low population density, mining friendly, and a place where the rule of law can definitely be relied on. Not without its challenges, but I'd say the challenges, having spent a large part of my career mining in China, it's on the fringe. They're small fiscal challenges, and they're not really will you own the assets questions. But 12 to 23% across our portfolio is what we earn, and we think that's pretty much the right number to be earning for a dollar invested in a gold asset. What's the cost of that production? And that's where you get that return. Low-cost production. These are the peers on the top 10 producers in the VanEck Gold Index, which we're a part of, and you can see we're right down there in the low cost, and that was last year, based on last year, clearly higher at today's gold price. Remember, the gold price was only 1,800 Australian dollars just 6 months ago in February, March this year. So we've had a great run in the gold price, but let's not assume it's going to go on forever. Cash flow. I said I'd talk about cash. Over the last 5 years, Evolution has generated $3 billion of operating cash, $2 billion of net mine cash flow. That's after all the capital we've spent at the mine, the growth capital, and that was at a 1,640 Australian dollar gold price. So the key challenge for us is making sure that our costs don't start creeping up and eroding that margin. We've got to bank all that money, as we did last quarter, and we've got to keep making sure that that gets banked, and we keep a focus on quality of production and cost of production. And that gives you the opportunity to reward your shareholders. So if you look on a per ounce produced basis, Evolution has by far the highest return to shareholders in your pocket out of any of the gold companies that we've shown up on the charts here. So delivering value to shareholders today, but also investing in growth for tomorrow. And this has been one of the transformative assets for us. We acquired it in 2015. We've owned it for 4 years now, just over 4 years. It had 1.6 million ounces when we bought it. It's now got 3.9 million ounces of reserves. And it's just worth reflecting that the endowment of that E42 deposit, which is the main source of production today, is 7.8 million ounces when you consider what's been mined before. It is a world-class ore body. But what you're seeing and what is the rewards of investing in exploration and discovery at that site. We've invested a significant amount in discovery. We've discovered a significant ore body in the GRE46 Delwini lode. It currently has 1.4 million ounces of resources. We are spending $50 million on exploration this financial year at Cal, including an exploration decline. We are very confident that we will have an underground mine at Cal, which will be higher grade than that existing open pit which we're mining today, and will make a very significant step change in our production profile as that mining, as that underground mine starts being defined and starts being progressed to feasibility study. There are no reserves currently in that underground resource. We are drilling intensely. One of the biggest challenges we have is the tension between our mining engineers and our discovery team, because the discovery team keeps on extending this mineralization, and the mining engineers want to start getting on and designing a mine. So the question is the size of that underground mine, clearly subject to permitting and various things, but not whether we're going to have an underground mine, it's just how big it's going to be. The other very transformative asset that we have in our portfolio is something we did with Glencore in late 2016. We bought an economic interest in the Ernest Henry mine, a very efficient, well-operated mine run by Glencore. It's a sub-level cave mine in the Mount Isa region, Concurry region. We take 100% of the gold and 30% of the copper, and we pay 30% of the capital and operating costs. We paid $880 million in December 2016 for that. That goes to the existing reserves, and below the existing reserves, which are at the 1200 RL level, we take 49% of the copper and gold, and we pay 49% of the capital and operating costs. It made $222 million of free cash to us, net cash to us in our bank account in FY19. It made over $60 million in the first quarter, this September quarter. It really is an incredibly good asset to own. Glencore and ourselves have committed to an underground drilling program now to drill below the existing reserves, and that's happening this quarter, and we should have results early next year. But the probability or confidence in mine life extensions there are high, but will be determined by this next exploration program. I've mentioned discovery a few times in this presentation. I think it really is one of the core values or key value drivers of a gold company. For us, it's about putting the right team together, giving them the right capital structure, and for me, being patient enough for results. We're getting them. We have the team, we have the capital, we're investing $80 to $100 million in exploration this year. We're developing a pipeline of earlier stage exploration development opportunities, and I think this is really going to be a key engine of value creation in Evolution going forward. You can see the results to date, but I think we're really just getting up ahead of steam, and it will start driving momentum over the next couple of years. So it's hard to summarize Evolution in 15 minutes, but that's all Kerry gave me today. So, what are my key messages to you? We're about creating a company that can prosper through the cycle. We think the only way you can do that is to focus on quality, not quantity. So we are focused on margin and value rather than volume. That's what's been a formula of success in the gold sector. It hasn't been taken very often or used very often or been disciplined to stick to very often because we have a bias towards wanting to grow volume over margin. At Evolution, I can assure you we are focused on doing things which are accretive for our shareholders. We don't think that bigger is better. 6 to 8 assets is what we think is the right size. We think it is very much a people-driven business, and we need to make sure that people matter in our business, and we don't just become a number in a big corporate system, because that, I think, is one of the fastest ways to value destruction. We've had some success to date. We want to be humble as we go forward, because I think we're just at the start of our journey of really creating a great gold company. So thanks very much. I think there's 1 minute and 34 seconds to take a question. Happy to take it if anyone has any questions.
Ladies and gentlemen, please thank Jake Klein. And wow, that was amazing. It's a big story to tell, and I bless him, he's always on time. Let's give him a question. Who's got a question for Jake? Any shareholders in the room? Yeah, I've got one just here. We got microphones, guys. Oh, you have. Oh, you're a shareholder. Question at the back, was there? Yes, just here. Just there. Yep.
Yeah, thank you, Kerry. And a quick question. I read in the paper, and I know you can't take too much notice what's in the paper.
Okay, good.
But they say you're looking at possibly going into maybe looking at the big super pit over in Kalgoorlie, or maybe something over in North America. Some of these things you read, can you put much credence on that, or you're just mainly going to concentrate on what you're doing here in Australia?
I think we've openly said that we do look at things. We look at things from a perspective of, will it be accretive to our shareholders? The only thing I can say about the super pit is every time I'm in Kalgoorlie, I do run past it and have a look at it, but that's not anything new.
Ladies and gentlemen, we are out of time. Please thank Jake Klein. Very good, busy go. Awesome presentation. Thank you.